First of all, I would like to welcome all of you with us here today at the Rec Innovation Lab at San Diego Miramar College. And we have with us the presenter, Julie Hansen, who's going to be sharing with us a little bit about financing from an entrepreneurial standpoint. And I'm going to actually ask all of you to please mute your microphones when you're coming in. For some reason, we still have those, the microphones on when we're coming in. I don't know what happened with that, but if you are coming in, if you can mute yourselves and turn off your cameras, that would be great. And I'm going to let Julie introduce herself, but before you do that, I just want to say we've just been so fortunate to be able to work with Julie Hansen here at the Rec Innovation Lab, and she's been with me from the beginning, and she's been really integral in helping us to get the rec off the ground and up and running, and yeah, we're grateful to have you, Julie. We love it, and we're grateful to have you here today. Sharing with us the finance, and I'll let you take it from there.
Sounds good. And I'll tell you, so I'm doing this workshop for one reason, and that one reason is that I got asked. So remember that as you go through as entrepreneurs, sometimes it just takes an ask to get what you want. Right? Tanya, you remember we were walking down Miramar campus and you were like, hey, Julie, do you want to put on a workshop? That's all it took, right? Was an ask. So anyway, welcome everybody. I am really excited to share. This is my favorite topic, money, right? I teach accounting at Miramar, at Grossmont, at San Diego State. I used to teach it at Palomar and Miracosta, all over the place. This could take me 17 weeks or it could take me 50 minutes. And I'm sure you'd prefer the 50-minute version. So that's what I'm gonna try to do. But listen, you guys, so because I'm a teacher also, like I really love questions. So, you know, just to kind of keep things going, you can put them in the chat, but I'm always open to talking more about this. And I'll just also start by saying that I am not personally an entrepreneur, unless you want to consider playing Monopoly in real life as an entrepreneur. Maybe I am a little bit of an entrepreneur, but I have a very entrepreneurial spirit, but I am not yet my own startup, but I have a lot to say about money, right? So that's kind of where we're going to start. So if I could figure out how to, so my idea here with this is that if you keep your eye on the money, that's going to lead to success, which is going to lead to more money. So there you go. So these are the topics I'm going to talk about. So first of all, we're going to talk about separating our business from our finances. Then we're going to talk about cash flow a little bit. And I couldn't decide if cash flow was more important than budgeting, so I left them in the same color. Personally, I think they all belong together because everything's important. Then I'm going to talk to you a little about how to track and monitor your spending, and then remaining optimistic. You know, remembering that you also have value, you have to establish your goals and then eventually pay yourself. So those are some of the things that we're going to talk about. But first and foremost, as you create your company, and I know we're in varying stages of creating our companies, but if I could give you this advice from the get-go, is there's you and your money, and then yours company. This is supposed to be your company, and there's the company's money or whatever your new business is. And the most important thing is to keep those finances separate. All right, I'm going to talk to you a little bit about how you can start tracking those expenses, but you are no longer your company. And when you get really big, should it go there, you'll eventually perhaps incorporate, which means that it is literally its own entity. But not to get ahead of ourselves, as entrepreneurs, we'll just want to make sure and keep our finances separate. Okay, so cash management, meaning, what does that mean? It sounds pretty important. All it means is managing my cash. So the first part is where it's coming from. And to me, this is where, like, all of you are probably focusing most of your attention right now. Like, how do I get customers? Where are my customers? What's my target market, right? What's my MVP, as we've been learning about, right? So that's all kind of the marketing side of entrepreneurship. And I think it is equally important to figure out and to track where it's going. So that's why I kind of look at this like, where's it coming from? and then where's it going? And obviously, if we are really good at generating income, generating revenue, which is the where it's coming from, but we're really not so good at watching where it's going out, we could likely fail on that thing alone. So I usually teach like more of the corporate financial accounting. So it's not so much for the entrepreneurs, but I always talk about entrepreneurs as I'm doing this, because really the most important thing is for us to focus on our expenses, right? So we have fixed expenses and we have variable expenses. Now, a lot of this, what I'm teaching you is not rocket science. All I'm asking you to do in this is to think about the different kinds of things that you're going to be spending your money on, right? So fixed expenses and variable expenses is really an important distinction, because if you have something you're creating and you've got a fixed expense, that is going to have to be paid. For example, if you're going to take out rent on a new warehouse to produce something, you've got to pay that same amount of rent whether you sell one widget or a million. So you really want to take care of determining how much of this is really fixed and how much of it is variable. When you determine what your variable expenses are, what's a variable expense? Well, if I'm creating, my latest, I'll use Ray for a second. I hope Ray's on, because, who doesn't love Ray? But anyway, let's say he's going to create new goggles for his VR experience. I don't know if he's really doing that, but let's just take that, and we're going to actually produce a product. What part of that are my variable expenses, right? Because if I produce one pair of goggles, I've got a certain amount of expense. If I manufacture two pairs, then I've got double that expense, and so on and so forth. So those are kind of our variable expenses. And then we really delineate between the two of those, because we think about what our break-even point is. In other words, what amount of product, either in terms of how many or what the dollar is, how much of my product do I need to sell to break even? Okay, and there's a whole formula behind this, and I actually share that in the spreadsheet that we've got going that Stephen posted a link to. But can you see the value in that? It's like, how many of these do I need to sell to break even? And our fixed expenses are really a big component of that, because we're basically going to take our fixed expenses, whatever we have to pay every month, and divide that by what we call a contribution margin is. And I won't get too far into the weeds, because I really want to kind of just make you love keeping track of your expenses, right? Because that's going to make you successful. But that's one of the things that we're going to think about, okay? And another thing, not to harp too much on expenses, but we really want to limit our expenses, especially those fixed.
And I just wanted to add one other thing there, Julie, if you don't mind. As entrepreneurs, we want to look at our fixed expenses and see how many of those we can actually turn into variable expenses, right? Mm-hmm. Turn into variable expenses by doing things like, instead of hiring people, by contracting and using gig workers, and so many things that we can do. If you can turn fixed into variable, you can ultimately save a lot of money. So,
right, because then if you have a variable expense, then it can be, it's very flexible, right? So that variable is also a flexible thing, right? I can spend a little. And another thing is that how do we really get a sliver margin on our products, right? So that's another thing for us to think about. And then, so if we limit our fixed expense, let's say I need a fixed expense. Let's say I really need a piece of machinery, or a big bolt cutter, or, a printer or something like that. You really want to take the amount of that fixed expense and figure out how long that asset, that's called an asset, how long that will last us, and then you'll basically divide that, what's the fixed expense, by how long that will last me, and that determines what our payback period is. So in other words, how many years or how many months is it going to take for me to actually get any kind of a payback on that asset. So Okay, so then another thing that we'll really want to do is budget. Now, it sounds like a lot more fun to go and reach customers and think of new advertising and get logos and that type of thing. Those are all way more fun. But if we also keep track of how much our fixed, how much our expenses are, then we are going to be so much better off. So how do we do that? We keep all of our receipts. I'm going to get into tracking that in a minute. And then we're going to pay attention to where our revenue is coming from. And our revenue could come to us depending on what kind of entrepreneurial business we're in, is how much of that is receivables. In other words, our income is not necessarily our cash. And before I blow you out of the water and have to put you back in, what that means is that sometimes, again, depending on your business, you may sell something, but then the revenue so that's revenue, but then our cash for that revenue may come in later. And that's why that cash management portion is really important, because we'll want to make sure that, well, when are my expenses due? And then when is the revenue coming in to cover those expenses? So that's where some of that cash management comes into play, right? Because we never want to wind up not being able to pay our rent, or not being able to pay our workers, or whoever we've hired, or whatever our expenses are. Okay, so what's another? These are all important safety tips. This is kind of how I'm looking at this, as important safety tips. So always haggle with your suppliers, right? You never take the first thing. You always want to make sure. I have. It's interesting. For some reason, in the last, I would say 3 to 4 weeks, I have been involved in 3 different real estate transactions, and I have had 3 completely different experiences. And I can tell you, the one that I had the least favorable experience one is one where I didn't get to haggle. So you'll always want to make sure, and you can take all of the prices and just make sure that you leave no money on the table. Now, obviously, all of us are probably working on a shoestring, so that may come naturally to us. But this is a really great time, especially, you don't want to take advantage of the fact that we're in COVID, but you also want to experience if there's any kind of a leverage or a silver lining as a result of us being in COVID, to be able to really negotiate the best price for us. So you'll want to shop around. Okay, and number 4 is really important. And I'm not ever going to pretend to be a tax person, even though I am an accounting professor. I really do not like taxes. So all I have to say about taxes, so I won't lecture you for hours and hours about taxes, but what I will say is you'll want to make sure, because you will need to pay, or at least report taxes, is if there is anything that depending on what kind of business you're on and how you've set up your books, you'll always want to make sure and have money set aside for your taxes. Okay, the last thing you want is for that tax bill to come due and you not be able to pay it, right? So unfortunately for all of us, I hope you all know now that the tax deadline has been pushed back this year. So that's helpful. All right, so how do we track this, right? We're going to need to keep track of every possible expense, partially so that we know where our money is going, but also partially because that's going to be good for our tax write-offs. So everything that we earn, we're going to want to try to find expenses to match up with that as a way for us to reduce our tax liability, right? And this is all above the board. That I'm not telling you anything that's illegal. I'm just saying that you'll want to keep track of everything, which is why in one of my previous slides, I say, hey, make sure that you keep track of all of your receipts. So for example, I own a couple of properties here and there, and I have to make sure that, for every trip I take to my property, for every possible light bulb that gets, that needs to be replaced, that I have to replace, or whatever my expenses are, I have to keep track of all of those things so that any rental income that I make, I've made sure that I am matching up those expenses with the revenue that I make. So that matching principle, that's kind of an accounting term. if you ever have to take an accounting class, you'll hear that, the matching up of my revenue and my expenses. So instead of writing it down on a piece of paper, which is also acceptable, or Excel, which I hate to admit, but sometimes I use Excel to do these, there are some really great software programs that you can use that will help you with this. So one of them is Mint. We actually had a finance workshop that was put on by the Rec Center, and it was a gentleman who does nothing but this, you know, all the time. And he introduced me to a program called Mint, and I use that. It's very similar to some of the other ones. Quicken is another one, and QuickBooks is the other one. And I'm not going to try to sell you on one version, you know, versus another, but when you get this slide deck, which I've shared, if you click on this link, there's actually a free educators or educator, as long as you have an EDU, I think, email address, then you get it for free. Okay, so, and free is a very good price. So I had a couple of quirks trying to work through how to get that. So I can always help you with that if that becomes an issue for you. I am not a QuickBooks expert, but I did figure out how to get the free version of it. Okay, and then you may think, well, what's the difference? Because Quicken and QuickBooks, I would say, are probably the two most primary ones. And so I just kind of gave you a rundown of like what QuickBooks will do versus Quicken, and I kind of match those up. But as you can see here, I kind of highlighted about things. So if you're going to take, for example, online payments via PayPal, then you can see that Quicken and QuickBooks will do both of those. If you do any kind of a payroll, Quicken will not work for you, but QuickBooks will. And you get what you pay for. So Quicken is a little less expensive, more cost efficient, but it depends on what you need it for. So as you can see, Quicken is mostly for personal finances, which would also work for your entrepreneurship. But as you get a little bigger, then QuickBooks becomes more of the norm for small and medium-sized businesses. And again, I put the payroll feature here, so Quicken does not have that, QuickBooks does. And invoicing and tax features are also things that QuickBooks does and Quicken doesn't. So as you're thinking about that, hopefully you're getting into thinking about how to keep track of those expenses. That's if you walk away from here with nothing else, hopefully that's something you'll remember. Okay, so statements, there are three basic kinds of statements. And again, I could teach this in 17 weeks or I could teach it in 50 minutes. So one of them is your income statement. So this is where you'll want to keep track of your revenue and your expenses. So I'm going to stop right here for just a minute because I want to make sure that you understand that you do not have to go through and start with QuickBooks and then start keeping track of your revenue, expenses, and then start entering that in, because sometimes it can all be very overwhelming at first. So if you don't have a program to track, what I would really like to see you do is just keeping a spreadsheet, right? Or a Google Sheets would also work. So income statements will show you the revenue that's coming in, right? And most of you will be cash based, meaning you won't be owed money for revenue that you've earned. But you'll want to keep track of all of that revenue, whether you got paid for it or not, and then you'll list the expenses. And then what's that really show you? That really shows you, because your expenses, let me put a kind of an explanation around expenses. Expenses are nothing more than what it took you to earn that revenue. So it's kind of an interesting way of thinking about it, but that's what the income statement will show us, is what money have I earned and what did it cost me, or what were my expenses to earn that revenue. And then the bottom line is, you can put it in the chat. What's that called? Revenue minus expenses is, you get a bonus point, the first person to put it in the chat.
Profit?
Profits.
And another word for profit is?
Income.
Good, who said that? Yeah, the word I was looking for was net income, but I'll take income. But profit is a net profit. We never want to see net loss, do we? No net loss, right? Net profit or net income. Yeah, that's what we call it. Very good, you guys. Very good. You've either taken accounting or you know something about this. Okay, so something else we want to think about is the balance sheet, okay? Is this going to make or break you? No. Is it going to help you manage who you are as a company so that you can grow from there? Yes, absolutely. It's like you taking a sort of a snapshot or an assessment of you as a company, right? Before you maybe entered school or entered this program, you had to do a little bit of a self-assessment for yourself. What are my assets? What are my liabilities, right? So an asset to the company will be the things that you own. What are the things that you own? You may not own a lot now, but you'll own some things. And then what are my liabilities? Meaning, how did I purchase that asset? Did I take out a loan? Do I have a credit card bill? Did I write an IOU to somebody, right? And then the owner's equity, which is the other part of that, is what I own just straight out. Okay, so if I were to look at my property management business, right, then my assets are maybe the houses, the liabilities would be my mortgages, and my owner's equity would be the portion of the house, or if I own a house outright, which I own a couple houses outright, that would be my equity. Okay, so that's how we look at that, right? And the more we know about ourselves as a whole, the better it's going to be for us to move ourselves forward. Okay, so we need to keep track of and list all of those things. And our assets, I don't know if you picked up on this, especially if you've taken accounting, you know that assets, the things that I own, have to equal either what I owe against that asset or what I own of that asset. Okay, see, if you haven't taken accounting from me, don't you wish you would have? Yeah, okay, so anyway, all right, and then the third thing is the statement of cash flows. So what does this really mean? This really means where is my, because if we don't keep track of our cash, and cash is just one of our assets, right? So that's just it's like a piece of our balance sheet. So we're just taking one of our assets called cash. And I don't know about you, but like cash, I can just never quite hang on to. I don't know where it goes. I've tried many different kind of wallets. They all just seem to evaporate my dollar bills. Doesn't matter if it's a Gucci, a Coach, a knockoff brand, they all lose my cash. So the statement of cash flows is really me keeping track of where my cash is coming in from, and my operating is really what I do on a daily basis, right? So if I'm, selling my service, if I have a SaaS kind of a thing, if I'm doing property management, if I've got something I'm selling, that's the regular operating part of my thing. And that's both my incoming as well as my outgoing, because I really want to know where my cash is coming in and where it's going out. Super important. And then if I do some investing and some financing, those are the parts, particularly like you may not do so much investing right now, but certainly for the financing part is if you've got an angel investor, you'll want to know where that money is coming from, right? So that you really get a feel for your cash. Okay, so those are some of the different kind of statements. Do you need all these on day one? No. Is it a good idea to start developing these so that you understand your company better? Yes. And if you take yourselves to an angel investor, the more you have this mapped out to show that you really understand your financial position, the better off you are. Okay. So another couple of things kind of coming up because we went into some of the weeds is remember that you should remain optimistic, but always make sure that you have a backup plan, that you're preparing for the worst. So if plan A doesn't work out, you've got a plan B, right? That would be like me, I'm buying another piece of property. My son got into San Diego State, so I decided I better send him away to college, even though I live in San Diego, for those of you that aren't familiar with who I am. So anyway, so I have a plan for him to move down there, but if it doesn't work out, I've got a plan B that's kind of a backup plan, right? So I'm hoping for the best, which is that I get my teenager out of the house, but I've got a backup plan in case that doesn't work out. All right, same with you. You'll always want to, especially as you're growing your business. I can imagine that it's like there's so many different options that can happen. There's so many different things. Don't get so tied into one possible strategy. You know, we'll want to make ourselves a MVP. I love that MVP. I just love that. You know, it's like, what's the most minimal thing I can do? And the reason we do that is because if that doesn't work out, we haven't gotten so far invested that we can't recover and pivot to something else. And besides that, I love that picture. So, all right. So some things that we'll want to do is set our financial goals, right? What do I want to attain? Where am I now? And where do I want to be short term? Where do I want to be in a month? Where do I want to be in a quarter? Where do I want to be in a year, 5 years, maybe 10 years? I don't know. I don't plan too much further out myself than probably a year to 5 years. 5 years is a very long-term horizon for me. And that's just me. And that's just partially because I am a natural born pivoter. If something doesn't work, I pivot to the next thing and I pivot to the next thing. Does that mean I don't plan? No, that doesn't mean I don't plan. That just means that I'm good for this. I'd say 2 years is probably my horizon when I set my financial goals. So I'll set it for 2 years. Right? And then at least I know where I'm going. Because if you just wake up every day and go, I'm just going to go create the best, I've just got all these great ideas and I'm just going to throw it out there to the world. You know, maybe you'll start to get like your one MVP and then let's create a goal for that. How many do I want to sell? How many customers do I want to reach? You know, where are my customers? Well, now I'm starting to get into Tam, Sam, and Song. But anyway, the idea is that go ahead and set a goal. And guess what? You can alter that goal, but you can't alter something that you don't set, right? So go ahead and set up something for yourself and then see how close you get, see why you didn't get there, and then we'll go and we'll change a little bit. There's nothing wrong with changing. There's nothing wrong with altering our goals, but I do see that there might be something not wrong, but just a better way to do things if we have a goal. Okay, so I like to put this one in here. Anyway, so you'll want to make sure and pay yourself, and this is the formula that I use for when you're going to pay yourself. And I'll give 2 bonus points to somebody that can unravel that formula. I'll give you 5, 4, 3, 2, 1. Eventually, that is the formula for eventually. So you will eventually pay yourself, right? That's what we mean. So my last kind of goals here are to keep calm and call Batman, keep calm and think of bacon, keep calm and pray, very important, keep calm and stay groovy. And before today, I left it at that, partially because I really want you to stay groovy, but then I decided to add one more. Keep calm and wear a mask. All right, so that is that. The next portion, I'm just gonna fast forward a little bit here. This is a spreadsheet. This is actually a copy of the spreadsheet that I am giving you, and I think maybe Stephen is going to share that with you. Anyway, I made a link so that you can have this, because what you're going to want to do, particularly those of you that are going to be working on your pitch deck, right, is that you'll want to fill out this, you know, your target market, and then you've got a smaller market, and then you've got a smaller segment of the smaller market. And I've created a spreadsheet that you can use if you would like. And I also created a video walkthrough of how to fill it out. And basically, if you insert, so it says anything italicized is automatically calculated. So if you put in, for example, there was an example of, you know, I'm going to take a certain portion of the US population that lives in San Diego, that's a certain demographic, right? Because we're really trying to get to who our target market is, which is part of our pitch deck. Anyway, if you put in things, then the italicized will be calculated for you. So you basically have to do a little bit of the work, and then I've created a spreadsheet to kind of finish things off, and it even creates a graph for you. But I created a walkthrough of how to complete that. Okay. And that is it. And look at that. I finished in almost 40 minutes. That's pretty good.
That's wonderful. Thank you. Thank you so much. Thank you so much, Julie. And I'm sure that the students the student entrepreneurs who are presenting or in my classes who have to calculate the market size are very happy and thankful for you for giving them that template to use. And Stephen, were you able to share that link with them?
Yeah, so if you scroll up, if you see the Google Docs survey, the Google Docs link, I posted it like three times. I can post it again. So it's right there.
Okay.
Yeah.
Oh, there in the chat.
And it should ask you to create a copy. Yes, look at that. Look, isn't that cool? Stephen and I figured this out, how to make a copy, right? Once you share a document, so then it'll create this. I have also, and I don't know if this is possible, but this is in Google Sheets, which may or may not work the same as the actual original Excel document. So I have kind of this love-hate with Google and Sheets versus Excel. So I know the Excel document, which I'll share on my screen over here, will work for you. But I'm not sure the Sheets one will, so I'm very welcome to, I posted I gave it to Stephen, the actual spreadsheet. But
so if you do have any issues with the Google Sheets, just let me know, and then I can pass that along also to Julie there. But yeah, I'm excited. I'm excited to try this out myself, and I'm sure a lot of the student entrepreneurs are as well.
And I also created the very skeleton in the, and that's why I don't know if it came across in Sheets, but I've created a income statement and a balance sheet. There's a statement of cash flows, and then there's a little bit of analysis, and I've given you a couple of formulas over here, but I knew I would run out of time, so I didn't want to get too far into that. But I think some of the things you'll want to think about in terms of a payback period or a break-even point, like even those two things right there would be super critical for you to get your hands around, so that you just don't go and blast something out and not know really how you're going to get that money back, or if that's really going to be a revenue generator for you.
Right. And I do want to say that, you know, so a lot of us we're very, very early stage, and we have not done our the testing of the market for the actual pay and to find out what our customers will realistically pay us for our products and services. But for now, we can at least use our competitors' rates, and that gives us somewhere to start.
Mm-hmm. And if you if you do that, even if you don't know exactly what your revenue is, you can also start collecting what your expenses are going to be. And if you use their rate with your expenses, you'll find out what your margin is and if that's going to be a good, viable opportunity for you.
Right. Yeah, absolutely. It gives us something rough. It's better than totally basing our you know, our business on assumptions. It's definitely better than basing it on assumptions. Yeah, so it's really nice to have that now, and so this is a good place for all of us to start. Those of us who are building out our businesses. So I want to make sure that we have time for everybody to ask questions to Julie if they have it. So were there any questions in the chat, Stephen, or are we good on the chat?
It doesn't look like there was any questions that anybody asked. Make sure, please take the survey. Just like last workshop, please take the survey. We appreciate the feedback.
So I think it's good to kind of pause here though, like, and just wait like 30 seconds and just throw a question out. Like, doesn't have to be a good one. It can just be a question.
There's lots of times left for the workshop. If you think of something, just shout it out.
I got a question about the survey. This is Jake.
What's up?
Go ahead, Jacob. Go ahead. Thanks.
I'm mobile right now. Is that survey link being sent out to the guest list through Eventbrite?
That should be the case as well. They're still working out the glitches, so there's like a chance that it might not send, but Lena and Emma have been working on a way that Eventbrite, people who sign up for Eventbrite will automatically get the survey links.
Cool, cool. In the meantime, can we stick that survey link at the in the reply section of the video once it's on Slack?
I will definitely do that.
Awesome. Thank you.
Other questions from the audience?
I have a question. This is Melissa.
Go ahead, Melissa.
Hi. I use QuickBooks all the time now at work, and I'd really like to get better at the reporting. What are like some of the best ways to report? I don't know how familiar you are with QuickBooks, but what are some of your favorite reporting tools and maybe learning tutorials to get better at that?
I would use actually the QuickBooks website for that, because I know they have a lot of really great tutorials. So I would probably start there. It kind of, like, reporting is great, but the most important thing is knowing what your question is, right? So it's not so much how many great reports can I create, but what are, so I would work more on, like, I don't know, what do you want to find out? Have you thought about that, Melissa? Like, is there a certain thing you're trying to?
Just really probably net income, or our exact profit margin. We weren't really using the projects feature in QuickBooks until now. And so now we're able to see exactly what our expenses are in relation to our income. So this is, I feel like I'm not exactly sure how we calculated that prior to me coming here, but.
Right. Well, and that's a really good, because then what do we find out if we do project reporting, right, which is actually more managerial accounting, which I could talk about for another 17 weeks, is what are, like, if I have, maybe I have 3 projects going on in my company, if I do job costing for each one of those, or project costing for each one of those, then what is one of the things that I'm going to uncover as a result of doing those? That's a question.
I'm sorry, the question was what things need to be covered?
Right. Yeah. So if I have 3 different projects, I'm working at your company and you have QuickBooks and you do project reporting, what's one of the things that's going to get uncovered right away?
Sorry, I'm still not.
Okay. How about this? Which project is most profitable?
I mean,
Right.
Yeah.
That's
I mean,
one of the
yeah,
things
that's what
we're
we're
going to find out, is which project is making me the most money.
Well, yeah, and we're trying. I mean, they're still
Mhm.
kind of same, but I think our profit margin varies a lot. You know, that sometimes there's a lot of cleanup involved with the job, and so costs increase. And right now, I don't think we have a clear vision of that. So we have a desired profit margin when we're estimating and you know, turning cost into price, but I think that gets really cut into when it's all said and done, but we have no clear vision of that. So
Right. And so that's what's really great about the position that you're in, is not so much how many great reports can I run, but what's the question? So the fact that you're now thinking about that question is super great, right? So if you just used to throw everything in one big bucket and now you're thinking to yourself, well, wait a minute, which project is making me more money, or which one has, or another way of saying that is, which one am I pricing out correctly? Is my bidding process correct? Or even more importantly is, why does this project, especially if they're very similar, why does this one have more expenses than this one? And then you can start peeling off. How many times have you guys heard this? Peeling off the layers of the onion. This is yet another onion for you. I know you've heard that before in other workshops because I've been on them, right? It's peeling away the layers of the onion. But Melissa, the fact that you guys are now asking that question, getting the report is going to be like technical. That's going to be like, well, I don't know, how do I click this button with this button and pull that thing out, right? But the fact that you're asking that question is the best part of that.
And I will say also, Julie, I know that we have here at the community college some short, small classes, like 1-unit classes on how to use QuickBooks. Now, I haven't taken the class yet, but I'm wondering if you have any. No, haven't taken. Anybody here taken one of them? I know Professor Diskin was teaching them and putting them on, but has anybody here taken any of those 1-unit QuickBooks classes? through SDCCD? Okay.
And Melissa, I do know a couple of really good QuickBooks instructors that also might be able to, you know, like if you have kind of a technical question about a specific report, they might be able to get that for you.
Yeah, that would be really great. And then I suppose I do have another question too about ordering inventory. So we get price breaks when we order larger quantities of a certain inventoried item. So my stance is like, well, let's get the price break. You know, we'll order 100 right now, even though we only need to ship 20 this month, but we'll get it at a better price. But my boss has more of a, you know, let's order just in time. Let's keep the money in the bank for as long as possible. We'll order the other 80 or, you know, order stuff as we need it. What do you say to that?
Well, then I say to that, how much of a discount am I getting, right? How much of it, like, I don't know, if it's a big discount, then maybe that makes sense because then you'll be able to spend that money on other things. But your boss's position also can be, and actually, this is a really tough question because, like, he's saying, I would rather keep that money that I would be saving on the bulk price and use that money to perhaps generate income someplace else. Right? So how can I be using that money that I would have been saving? Can I make more money on my own money than I can giving it away to somebody else? So do you understand my take on that?
Yeah.
Okay, so let's say I'm going to save $20 by ordering 100 instead of 20, right? I just pulled that number out of the air. I saved $20, right? So I'm going to give them, you know, $100 for 100 products, or I can, you know, because it'll be $1 a piece, right? Or if I ordered them one at a time or on a just-in-time basis, I may spend $120. So do you see how I'm saving $20 now, right? So I think what your boss is saying is, well, I can take that $20 that maybe I'm going to spend extra on and go over here and make more money by me saving the extra that I will have had to give to him.
Yeah, it seems like a really wicked problem because it's like whether it's a little cost or savings or a big cost or savings, you know, it's like
right.
It's a lot, but we also spend a lot, so it's like it's wicked in that way.
Yeah, it is, and all. I mean, doesn't Amazon kind of do that to us when we sign up for things like subscribe and save? Right? How many of you have signed up for subscribe and save thinking, oh, I can save myself 15% and I know I'm going to need that next month, but do I really need it? I don't know, maybe that's not the greatest example, but I know you know, maybe Costco is a better example, right? Okay, so I call Costco the $100 store as opposed to like the Dollar Tree, it's the $100 tree, right?
So I was going to ask everybody if they wouldn't mind. I love to get pictures. You know this. I was wondering if everybody wouldn't mind turning on their camera so that we can get a photo and commemorate the day. And I'll just take a picture here together. So if you wouldn't mind turning on your camera, they would really appreciate it. And I will snap a shot for all of us. Get camera ready. Right. Give it just a minute or two for everyone to come on. Hi, everyone. Did you cut your hair, Haley?
Oh, look at that.
So cute. I love it. I love it.
You guys are all doing good on your profile too.
Oh, it's so nice to see everybody. I love this. Okay, so 3, 2, 1. So 3, 2, 1, cheese. And maybe just one more for good measure. 3, 2, 1, and smile. Great. Wonderful. So looks like I might have somebody's microphone is on. I'm going to go ahead and mute that for a second. All right. So Julie, would you like to take us out and end the workshop?
Yes. So what am I going to say to take it out? Oh boy. All I have to say is make money and then keep track of what you're spending to make that money, because that's going to be your ticket.
Isn't that the truth? Well, thank you so much. Thank you, Julie. Thank you all for being here. And yeah, another great workshop. Wonderful. Thanks. Everyone have a good one, and we'll see you all.
I guess on the way out too, if you guys, for those of you that are in 270 and working on your pitch decks and you want help with that spreadsheet, like I'm super open to you reaching out to me. And I'm sure if you don't know how to reach me, you can find me on Slack. Tanya,
What's the best way to reach you? Best way to reach you?
Texting.
I'm the same way. Texting is great. If you want us to text.
Mobile in the chat, is that okay?
Yeah, put mobile in the chat. I'm a big fan of texting. If that's the fastest, best way, let's do that. So thanks for sharing that with us. So yeah, thank you. And there's Julie's contact in the chat there for everyone. And thanks all for being here again. Appreciate it.
Thanks for having me. This was fun. Yeah. I could do
sure.
like 17 weeks of this.
That's great. Thank you. Thank you.
All right, you guys, take it easy.